What's up, guys? John here. The state of Texas is on fire.
We start this morning with massive wildfires across Texas.
4 fires burning thousands of acres, including one near a nuclear weapons facility just outside Amarillo,
forcing the governor of Texas to issue disaster declarations in more than 60 counties.
Multiple towns have already burned down. Over 500,000 acres burned to ash. Yesterday, that number was 250,000 acres. But for context, this is the second biggest fire in the history of Texas. Now, Texas was incorporated in 1845, so roughly 180 years. The second biggest fire in 180 years. Now, when you look at what's happened over the last, call it 120 days, you had the flooding in Maine. You had San Diego flooding. You had Los Angeles, the mudslides. You had flooding in San Francisco. You had all these situations unfolding all throughout the country. What is going to happen next is homeowners are in really big trouble because insurance premium is about to go parabolic.
Home insurance costs are on the rise across the country, driven in part by weather-related disasters.
Disasters are making home insurance unaffordable and in many cases almost impossible to get.
And at the same exact time as everything's happening with insurance, all the fires, and interest rates are through the roof, the Fed just announced that we might not be done. In fact, we might increase interest rates again. So property owners are in very, very, very big trouble right now. And I believe what we're going to start to see is the biggest insurance rug pull in American history. And it's going to hit millions of property owners like that. I'm going to break it down and give you the facts in this video. Please hit the like button, hit the like button. YouTube will share this content to educate the people about what's really going on in the U.S. real estate market. If you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Take a look at this. So this is absolutely shocking. Wildfire grows the second largest in Texas history as flames menace multiple towns. Look at this. 500,000 acres forcing evacuations and cutting off power. Absolutely, absolutely devastating. Now, what is going to be really shocking is just how far this goes. Now, 19 hours ago, they said nearly 250,000 acres burned. Then over 500,000 acres 20 minutes ago, NBC News. Now, when you start to look at what's happening with the homes that are getting burned, you start to see how fast this thing is really picking up. You look at Florida, for example. You look at California, you see insurance companies pulling out. You're starting to see this happen time and time and time again. So what's going to happen? All these people that acquired properties in these states are going to get hit with a massive surprise in the next couple of years, even though they have this 2%, 3%, 4% mortgage. And a lot of people that can hold on to these mortgages, it's a blessing. But a lot of people also are not going to be able to offset the rising costs of insurance. I mean, what they're projecting to happen next is going to shock the world. So homes that burned in almost every direction. Property insurance. Oregon homeowners face soaring premiums, few property insurance options over wildfires one day ago. What new insurance commissioner is doing to address property insurance crisis? 8 hours ago, debate over Louisiana property crisis. You just start to see this is all over the last 24 hours, right? So Florida, Oregon, everywhere. This is absolutely shocking. And they say, for example, just Florida, according to the Insurance Information Institute, homeowner insurance have increased 102% over the last 3 years in Florida and cost 3 times more than the national average. Now, what they're projecting about other markets, homeowners insurance increased nearly 11% between 2021 and 2022, according to private banking firm S&P Global. They say, in Florida, it's $6,000 for the average cost of insurance. Do you think about that? $500 a month, right? How many people can afford to pay this? And when you start to see these rates starting to get pushed out through all these other markets, and at the same exact time, Americans are getting hit with inflation to likes in which they've never before experienced. I mean, look, here, Americans are paying an average of $605 more each month compared to the same time 2 years ago, and $1,019 more compared to 3 years ago. So as inflation's getting worse, as interest rates are getting worse, and property insurance is getting worse, how do people hold on? It's the big question. How are people going to be able to hold on? Because I personally don't think that we're seeing the end anytime soon with these disasters. They're popping up almost every other week. One major story, one major event is happening. And this is all going to get pushed on to us. So you look at this, for example. Freddie Mac reports that multifamily serious delinquency rates increased sharply in January, up 0.44% to 0.28% in December, and up from 0.12% in January. And so what this looks like for multifamily, and this is going to have a massive impact on the real estate market and the housing market and the overall economy, is look at delinquencies right now. This is according to Freddie Mac, right? Through the roof. It's parabolic, like it's vertical, right? And so when you have a situation like what we're having right now with what the Fed has just said, like this is, I'm going to show you the URL so you can see this, federalreserve.gov. What the federalreserve.gov just said is, my baseline outlook is that inflation will decline further with the policy rate held at current levels. Should the incoming data continue to indicate that inflation is moving substantially toward our 2% goal, it will eventually become appropriate to gradually lower our policy rate to prevent monetary policy from being overly restrictive. Now hold on. In my view, we are not yet there at that point, and a number of important upside inflation risks remain. These include risk from geopolitical conditions, including prominent risk of spillovers from geopolitical conflicts, and the extent to which food and energy trade markets supply chains remain exposed to these influences. There is also risk that continued easing in financial conditions could add to momentum of demand, stalling any further progress in lowering inflation or even causing inflation to reaccelerate. Finally, there is a risk that continued labor market tightness could lead to persistently high core service inflation. Today's labor market data, which indicated a pickup in wage inflation in recent months, suggests ongoing elevated wage growth as some businesses continue to report above wage increases to compensate for inflation. Now, given these risks and the general uncertainty regarding the economic outlook, I will continue to watch the data closely, especially the inflation data revisions next week and upcoming inflation report, as I assess the appropriate path to take. The frequency and extent of data revisions over the past few years, as illustrated in today's employment report, make the task of predicting how the economy will evolve even more challenging. And I will remain cautious in my approach to considering future changes in the stance of policy. Reducing our policy rate too soon could result in requiring further policy rate increases to return to inflation at 2%. So look at this. They're talking about increasing interest rates on the federalreserve.gov's website. I mean, this literally just came out. So you start to see this. People aren't talking about what's really going on. They're saying, we might see a, rate cut at the end of the year. We might see another one coming out at the end of the year. No, it's not likely going to happen. What's happening is homeowners and apartment owners, landlords, they're being pushed to the brink. It's going to be the greatest rug pull that we've ever seen before. And look at this. For example, like rents are collapsing in an affordability crisis where homeowners are getting hit with all these big premiums. What are they going to do? They're going to try to reduce their monthly expenses. That's what they're going to do. And you have, Florida, Oregon, Idaho, rents have fallen 9.2%, 5.76%, and 5%. You can get rentals now. And in some of these markets, for example, click news, go to, let's just call it the last week. You look at the last week, housing costs are running hot, but is the data missing cooling trend? Rents have started falling and rally. Rents are falling, but mostly for wealthy people. Arlington moves to a 7th priciest rental market in the U.S. Here's what the price of rent is dropping in the U.S. Rentals continue to fall in 2024. You see the rental. Will the rental market crash in 2024? High average rents fall in Nashville as vacancy rates are the highest in 20 years. Rents one bedroom fall for the second time in 3 years. You're seeing the trend. You're seeing the trend. In affordability crisis, you're going to see people not looking to buy, this is the average price home in America, $419,000. With 6% down, which is the average down payment for a first-time buyer, they're not looking to spend $3,700 a month for a house where the costs are going to continue to rise, taxes and insurance are going to continue to rise. In an affordability crisis, they look for an affordable option, which is going to be renting. And so you're going to see millions of people getting pushed out of their homes over this situation as interest rates are through the roof and costs are just going to continue to rise. And these layoffs, you're going to just start seeing more and more and more people pushed out of work. All of this is happening like the last 24 hours. Like this is all coming right now. And a lot of people, think, this might not happen, but when you look at the chain of events, you look at these fires, you look at the real problems that are unfolding, it's very clear, it's easy to see that the market going forward for 2024 and 2025 will be one that benefits someone with really good income, cash in the bank, exceptional credit, and a really good game plan. So if you have those things in line and you're positioned, you will be better off than 99% of people that believe that, hey, we're going to have this soft landing and everything's going to be great. We're going to go back to 2018, 2019 again. Look at the cost of fast food. Like, you go through a drive-thru with a family of 4, you're looking at spending 60, 70 bucks. A few years ago, you could have went to a nice restaurant for that kind of money, right? We're not going back to that day and age. We're walking into the world of uncertainty, and it will benefit those that are prepared. Drop below. Let's have a conversation about this. And if you'd like to fix your credit to position yourself for this massive wealth transfer, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session for tomorrow, and I'll catch you next video.